Okay, today, broadly on the markets, we got no respite from tariff tensions. President Trump's latest moves on import duties mildly shaking investors. Let's get more from Martin Pelletier, Senior Portfolio Manager at Trivest Wealth, Wellington-Altus Private Counsel. Looking good there, but you got a black hat. You're not a bad guy.
Well, tell my wife that.
Anyway, just remind me, is the stampede over or when does it end?
Well, it keeps getting earlier and earlier. It was started last Thursday night, and we're 1/3 of the way through. So maybe I'll switch to the white hat if I make it to the end of the week.
Martin, tell us, we got Larry Berman earlier telling us, and I don't think it's entirely a new theme, that the market seems to be much less sensitive now to tariff threats from the White House.
Yeah, it seems to be a lot less sensitive to a lot of things. Macroeconomic uncertainty, trade wars, geopolitical instability, and they seem to be defying gravity. And it just gives a good old cowboy saying that sometimes you got to ride out the dust storm to see the trail again. And here we are, the dust storm is past and we're seeing the trail. It's just a matter of, is there another dust storm coming? And, are we prepared to ride it out again? So there's a lot of uncertainty, a lot of volatility, a lot of ups and downs in the market this year.
Being a cowpoke was a horrible job, but still a tough job, but a dangerous, low paid. Apparently on a ranch, any belly aching, you were instantly fired. Maybe we should all adopt that in our workplaces. Anyway, how are you positioning yourself right now? I mean, with the markets essentially at record highs, have you been cutting back on stocks, Pelletier, Martin?
Yeah, we've been, well, it depends where you're at. I mean, it's been one heck of a ride. NASDAQ fell 25% from its highs. Now it's up on the year, and the S&P was down 20%. So we're now back to where we started at, maybe up 5% or so on the year. There's some good dividend yields out there. You mentioned about the banks. I prefer the saying that Scotiabank saying that we're richer than you think. And they got their dividend yields that are paying out quite handsomely. There's some ETFs that you can use that are paying 5% dividend yields. So I think now's the time not to get too aggressive, but looking at where yields are at and where bonds are at, they're not that exciting, especially given the outlook for potential interest rate cuts or maybe staying flat. The longer term end of the curve is staying quite high. And so bonds aren't looking very attractive, and growth stocks have really come back here. And if the Fed doesn't cut, what kind of growth are we going to see there? You still have the trade uncertainty. So, sticking some good old-fashioned cowpoking and looking at the TSX and some of the dividend stocks we have a little bit of an active manager, Outcome Metric in Toronto has done a good job for us. Telecoms are looking interesting, especially TELUS. And then we've been making utilization of structured notes, which has been very helpful for us.
So some of your ideas there. You mentioned dividend stocks. So there's the XEI, which is the iShares TSX High Dividend. And then you mentioned that Outcome Canadian Equity Income Fund. And then TELUS. Yeah, the yield on TELUS about 7.5%.
Yeah, and the payout ratio is a little bit high, but they have a lower debt to equity, and we'll see what happens in the CRTC ruling, which will potentially benefit them. They also have some diversification with health and agriculture. So, and plus it's Western Canadian, so we got to support local.
Okay, yeah. And of course, you reckon, our own parent company, BCE, slashed the dividend. You think TELUS is unlikely to do that, Martin?
Potentially. The yield is higher than BCE. Fundamentally, we do like TELUS ahead of BCE with the higher yield, despite the lower yield on BCE being a little bit safer from that standpoint. Just a better run company and better management team in place. So not to speak poorly of your parent company, but we think TELUS is a better buy at this level.
Give us your take. Politically, the stampede, or the Prime Minister, Mark Carney, showed up. Apparently, he was booed at one event. But what do you think, though? Is his initiatives, he says that a pipeline is likely to be one of the government's first high-priority infrastructure projects. Do you think he's winning over the West in any sense?
Well, I sure hope that his promises come through more than and his ability is to flip pancakes. Well, I mean, proof is in the pudding. We still have bills, C-69 and 48. Those haven't been eliminated. He's saying the right things. We had some really good news coming out of Premier Ford and Danielle Smith, Premier Smith, with Ontario and Alberta working together. I was at the Cowboys opening on Thursday night. There was a lot of politicians there, and I've never heard the Canadian anthem sung so loudly and proudly, which was fantastic. So it's nice to see what's happening south of the border, reuniting the country together, and that means maybe some more pipelines and some more revenue around that. I really hope that's the case, but there's a lot of talk about it. But again, we'll have to see what it looks like in a couple of months from now, if there's any sort of progress made beyond just the words that we're hearing.